Good morning, good morning, good morning, good morning, everybody, or good afternoon, depending where you're at, and welcome back because we had some big news that hit this morning at about 8:30 a.m. Eastern. The Fed's favorite inflation gauge, well, the PCE report dropped. And spoiler alert, inflation is still hanging around like your mother-in-law after she said she was only staying for the weekend. Yeah, all right, sure, Margaret, get out of here. We got a life to live, all right? Jerome Powell warned us earlier this week that there's no risk-free path forward, which in Fed speak, by the way, means you're screwed no matter what we do, folks. And after today's numbers, he's right, because this economy looks less like a soft landing and more like a crash landing where the captain comes on the intercom and says, we'll be fine. Probably. Now, let's go ahead and make like some butt cheeks, spread this open, and dive right in. And let's talk numbers. The August PCE came in exactly as expected. Headline PCE is up 0.3% for the month and 2.7% year over year. Core PCE, the one that Powell actually cares about and strips out all the, volatile things, well, that was up 0.2% month over month and 2.9% year over year. Yeah, 2.9% is back, baby, and it looks like it's not going anywhere because I think we've been seeing that number for almost 5 years now. Now, the translation in this, the inflation isn't raging anymore, but it's not going away either. It's like that party guest who doesn't cause trouble really, but won't leave your couch. Meanwhile, think of the Seinfeld episode where Jerry gets stuck in like Long Island, right? And he was like, oh my God, I can't get a ride home. And then Kramer comes. Yeah, anyways, let's move on. Meanwhile, incomes rose 0.4%. Disposable incomes up 0.4% as well. Sounds good, right? But real disposable income adjusted for inflation only went up 0.1%, which means your paycheck is basically a treadmill at this point, running hard and, well, going nowhere. Spending, well, that's up 0.6%. Great, except the savings rate is now down to 4.6%. That's the lowest we've seen in over a year. We're financing Starbucks lattes on Visa like we're in some kind of consumer Hunger Games. And like you can now like break out your Chipotle order into 3 to 4 orders. Excuse me, sir? No, I will not make 4 payments of $4.99 to pay for my $13 Chipotle burrito. I digress, though. So, what's going on? Well, Powell is stuck on the tightrope. Cut rates more aggressively and risk stoking inflation again, or stay cautious and risk the labor market just absolutely crumbling. And what does he say? Well, there's no risk-free path, which is Fed speak for we're juggling chainsaws. Please clap before I cut my hands off. Now, the dual mandate, maximum employment and price stability, sounds great on paper, but in practice, it's like asking someone to walk a tightrope while juggling fire and carrying Trump on their back screaming, faster! Now, here's where it gets fun, though. The Fed is at war with itself. Stephen Miran, Trump's mouthpiece that he put in there, the new Fed governor, is out there on Fox Business saying we need cuts of 200 basis points. That's not policy. That's a kamikaze run. He's basically the drunk uncle at Thanksgiving yelling, just sell the house and buy crypto. We'll be fine. Bitcoin's going to be $1 million one day. Then we also have Austin Goolsbee, the Chicago Fed president, and he's over in the corner panicking about stagflation. He's muttering about sticky inflation like, well, he just saw a ghost. And then we have Schmid from Kansas City, and no, not the Kansas City mob, and he says things like, things are only restrictive, slightly restrictive. That's like saying your house is only slightly on fire. What? And meanwhile, Mary Daly and Michelle Bowman are like, relax, cuts are coming, honey. They're the doves in this bar brawl, whispering peace and love while Miran's throwing chairs. So Powell, yeah, that Fed isn't one voice of reason at this point. It's a dysfunctional family reunion or a Real Housewives reunion at this point. Uncle Miran wants the keg tap. Cousin Goolsbee is crying in the corner. And, well, Powell's just praying nobody burns down the house at this point. Now let's zoom out. What is what does the actual economy look like right now, right? Incomes are up a bit, but inflation eats most of it. You feel richer on payday, and then Target and your landlord bring you back to reality real quick. Spending, well, it's strong, but it's fueled by debt right now. Americans aren't pulling cash out of savings, they're maxing out their credit cards. And then the saving rate at 4.6% means, well, we're one busted transmission or medical bill away from financial ruin. And then also we see jobs are slowing right now. Real disposable income barely moved, and unemployment's, well, creeping up. The U.S. economy is like a patient on life support right now, stable, but every doctor in the room is yelling about which organ's going to fail first. And, oh, the markets. Well, they love this kind of mediocrity. Stocks see in line with expectations, and while they throw a party, the Dow is up. The S&P, well, now at this point, it's up 0.49%, and the NASDAQ, well, it shrugged it off. But the real winner is gold, because when Powell says no risk-free path, investors say, screw it, give me my shiny rocks and stop asking me questions. Meanwhile, NVIDIA just threw $100 billion into OpenAI earlier this week, which tells you two things. One, AI is still the drug of choice on Wall Street, not cocaine anymore. And two, nobody actually believes Powell has this under control. So where do we go from here? Huh? Well, Powell hinted at 2 more cuts by the end of 2025. Hawks say over my dead body. Doves say cut faster before the job market collapses. But this PCE report gave, well, both sides ammo. Hawks can point to inflation still above target at 2.9% core. Doves can point to slowing incomes, weaker jobs, and consumers blowing through their savings like they're at a strip club in Vegas. Bottom line, Powell wasn't lying. There is no risk-free path at this point. The Fed is damned if it cuts, damned if it doesn't. And you, the investor, the worker, the consumer, the mom, the virgin, the guy who's living in his grandma's basement, you're basically the crash test dummy in, well, Powell's great experiment while you go out there and buy those 0 date to expiration puts or calls on SPY, IWM, or QQQ. So here's the takeaway. This isn't a soft landing, folks. This is the drunk guy at the wedding, well, insisting he's fine to drive. Sure, maybe he makes it home, but are you betting your 401k on it? Exactly, because I'm not either. Anyways, I'm Max Pitts. This is Trades and Gains. This is the new setup, by the way. I hope you guys have a great day, and I will see you in the next one.